Good morning, everyone. Today is Thursday, September 20th. Thank you so much for joining into our healthcare reform webinars. We have been running these for about 5 years now, and I often say how surprised I am that, how much we have to discuss each and every week. But, with this new administration, not so new, there are things that are happening rather quickly. I guess it depends from your perspective if that's a good thing or a bad thing, but I really do thank you for joining in. For those of you that are new to the format, my name's Deb Wilkinson. I'm the Vice President of the Health Plan Options Department here at URL. My duties include overseeing the traditional group health markets, the level funded, self-funded, reference-based pricing, the new short-term medical market that is new again, and as I always say, what is left of the individual market in the Commonwealth of Pennsylvania. Your questions are encouraged. Again, if you're new to the format, there are a couple ways that you can answer or ask questions. You can put up your electronic hand, which is in the control panel to the right of your screen, or you can type in questions in the question box, and I will answer those at the end of the webinar. This webinar is being recorded. For those of you that joined in last week, we had our guest speaker, Phil Mishler, from I was going to say Assurant, formerly Assurant National General, and talking about the new short-term limited duration medical insurance. We had a technical glitch that the webinar last week did not record. So it is recording this week, and Phil has graciously agreed to come back and do the webinar again for us. So just before we get started, if you could just show with your electronic hands if you can see my screen and hear me okay, that would be great. Oh, excellent. Thank you all. Great. Okay, so let's just get right into the agenda. Our product of the century, I would say, is our short-term limited duration medical insurance that will be available for sale October 2nd. So coming up very quickly for 364 days versus the 89 restriction that we had previously. Again, Phil Mishler is on today's call, and we appreciate that he agreed to join us again. We'll get to him in a second. I'll hand over the controls, but there are a couple things that I did wanted to review and also update you on. So 2019 FFM certification, there are two vendors, AHIP and MLMS. Both are available. There is a fee with AHIP, but I believe it also adds some CE credits. So the choice is yours. Highmark for Central, Western, and Northeast do require that you have the FFM certification, even if you are only selling off marketplace. So just be mindful of that. If you plan on not selling any individual ACA on or off marketplace, I would encourage you to still take the test, do the certification to really protect those renewals. You work hard for that money, what little money it is now, but don't let that reduce anymore. Protect those renewals for all of your hard work. This new House GOP Bill, Save America's Workers Act, there are actually the House Rules Committee is going to review this bill as early as today, and they expect possibly a vote as early as this week. Some of the provisions within this bill are everything that I think that a lot of us have been wanting for a long time. Employer mandate penalty, they're talking about delaying that, retroactively delaying it back from 15 through 19. Now, keep in mind, this is going to be, according to the CBO, a very costly sort of bill if it does become law. But, these are all the provisions that, again, that we've all been wanting. So again, employer mandate 215 through 219 being delayed. What that means for refunds or any penalties that employers have paid or will pay is yet to be determined. Also, the bill would change full-time definition from 30 to 40. Gosh, that would be awesome. We'll see where that goes. And this one always cracks me up, the delay of the Cadillac Tax until 2023. This poor Cadillac Tax, I don't think any of us ever thought this thing's going to fly, because as the ACA law progresses, there's not many plans, group or individual, that could pass the muster for not getting this Cadillac tax. So that's a good thing as well. What was not included was the drug pricing bill that would require drug makers to disclose their pricing in advertising. So that was not included, which is rather disappointing. So again, we'll keep watching that. This also in, PAHU has a seat at the table for a hearing on Monday with the House Insurance Committee in Pennsylvania. And Damian Mochin, who is PAHU's president currently, is going to be offering testimony. That's at 11 o'clock. I will be there, and I'll follow up with those details, both as the CPAHU legislative chair, but both, for you as well, for those that attend my webinar. So right now, we are going to hear Phil again, and please type in your questions or raise your hands. He's definitely willing to stick around and answer those questions. We're just super excited about the options here for the short-term medical programs and how they're going to really fit and fill a need for these folks. And remember that 2019, that individual tax penalty is zeroed out. So no harm, no foul from selling these plans if you sell them correctly. So Phil, I'm going to hand it over to you. Thank you so much for agreeing to do this again for us.
Thank you, Deb. Appreciate the carving of time from your call for me. I want to just thank the agents on the call. I know this is a crazy busy time of year for you folks, and I appreciate you being on the call. So we are not going to go through a death march of PowerPoint slides, so don't worry. I only have 6 slides here, but today's a day to get your questions answered, and I'm going to go through everything that we have to offer to help customers. So just want to start by saying congratulations. You folks on the call have survived the last 7 years of the ACA, and now it appears time for us to be able to help customers who are in pain over the cost of their health insurance. We can't help them all. We'll get into why we can't help them all, but I think it's important to just let you know why National General. Why in the heck would you look at our products? So here's a few reasons. Number one, we have the shortest pre-existing look back in the business. So we consider a pre-existing condition to be anything that occurred in the 12 months immediately preceding the insured's effective date. So every one of our competitors is either a 2-year look back, and we have one here in Pennsylvania that's actually a 5-year look back. And it makes a difference, for obvious reasons, that we have a shorter window that we're considering pre-existing. But also, if you weren't aware, we write for doctor records on every claim, and so does every other short-term medical carrier, because they've got to make a determination on pre-existing and other things. So when you boil it down, it's much easier to get 12 months of medical records than it is to get 5 years or even 2 years. If you're comparing us to one of our major competitors here in Pennsylvania, we do not have a $3,000 limit on prescriptions. As a matter of fact, we have no limit on prescriptions other than the policy maximum. We cover sickness in the first 6 days, which is not common with one of our competitors, and we are the only quality carrier to have a guarantee issue short-term medical. So we're going to talk about that. But so here's what we have. So when we look at this, what you're looking at here, so we have 5 deductibles. The policies that we're going to be promoting during open enrollment are exactly what you see here. So nothing is going to change. The best part about our short-term medical product is the Aetna Open Choice PPO network. It's important to know, if you're new to the product, we do not force your customer to use this network. Your customer can use any doctor, any hospital of their choice in America, but they'd have to have rocks in their head not to use the Aetna Open Choice network for several reasons. One, they're going to ride on the negotiated discounted rate. And 2, it is a killer network almost everywhere. In my opinion, it's the best network in the country when you compare it to other national networks. You're going to have trouble finding doctors and hospitals that don't take it. Another benefit that we offer that nobody else does that I'm aware of is we'll do child-only policies. As long as the child is 2 months or older, we'll take them. So currently, the only first dollar product we have, first dollar benefit we have today is a $50 unlimited urgent care copay. And with the urgent care copay, that $50 is to walk in the door and get diagnosed. If they're doing expensive testing, lab work, MRIs, CAT scans, those type of charges, as you see here, well, actually it doesn't say here, but I'm going to tell you, if you get expensive stuff done to you in the urgent care, those charges go to your coinsurance. So just a little known fact, we still offer a $5,000 and a $2,500 deductible and then 100% coverage. So should a customer buy that, walk into the urgent care, anything they get done is covered at that $50. So hopefully that makes sense. When they purchase our plan, we do force them to join our life association, which is a $15 a month charge. Membership comes with a lot of benefits, but the only two that are worth mentioning is that's where customer accesses their telemedicine benefit, which is free to use. And that's where they get their outpatient discount prescription drug card. So if you're not familiar with how drugs work on our plan, if it's a drug that's administered in the hospital, it's covered under the medical plan. If your customer is seeking a prescription for a non-pre-existing condition, we give them a deeply discounted discount card in order to fill the prescription. So what is changing here in Pennsylvania is the out-of-pocket maximum. So on September 30th, our out-of-pockets are changing to what you see here. That's the bad news, so to speak. The good news is that our rates are not changing for our 364-day policies, other than any minor trend. So the rate that you come up with today is going to be a couple of dollars off the rate that you're going to see for 1/1 effective date. So hopefully you're seeing that as good news as I do. All of our plans have $1 million maximum. Unless you choose 50%, then you're getting a $250,000 max. So if you don't like, if a $250,000 max makes you nervous, don't quote 50% co-insurance. All right. Let's see what else is important to know here. Okay, on the guarantee issue product, here's how the guarantee issue product works. If your customer breathes air and they've got a credit card, they can buy this plan. The only difference between our standard short-term medical and the guarantee issue is that we limit the maximum on the guarantee issue to $100,000. So probably the best way for you to look at it is we're going to give your customer $100,000 a benefit. Their out-of-pocket is $10,000. So, in a way, we're going to give them a $90,000 of coverage. If they use a network, their dollar's going to go a lot further. So regardless of how you feel about 100,000 max, it's 100% better than no coverage at all. So you may run into somebody who, for example, has diabetes. If you have diabetes, there ain't nobody going to take you on a short-term plan. We'll take that person. We will not cover their pre-existing conditions, including diabetes, but we'll cover them for everything else. So if you have someone you run into who falls into that situation, they have a tight budget, they don't qualify for an ACA subsidy, and their budget says, I can't even afford a bronze plan, this could be an option. Okay. Let me go back a second. I'm just going to stay here for a second and just tell you a little bit more about short-term medical. So if some of you on the call may be looking at short-term medical more closely for the first time as far as an alternative to an ACA plan, so it's just important to keep these things in mind. Number one, the fine for next year for not having an ACA plan is gone. Short-term medical is not for everybody. If you've got a customer with ongoing medical conditions and you put them on the short term because we don't cover pre-existing, they're going to have trouble. They're going to have problems. So suitability is super important. You'll know when it is a good fit because you'll hear them tell you, hey, I'm paying too much for my health insurance. Well, that's everybody. They'll follow that up with another statement that says, and I hardly ever use it or I never use it. That's when you ring the bell. That could be a good fit. And what I would say is if you're not sure whether somebody's a good fit for the short term, call. Let us help you figure it out. If it's super gray, I would always recommend to go to the ACA. Okay, so let's talk about this extension. So if you're not a new agent and you've written some business with us, then you currently have customers with us. So I'll let you read this for a moment. Okay, well, hopefully you're a fast reader. So I'll boil this down for you. Basically, if you're an existing customer with us in your second, third, or fourth policy period, with these 4 policy packages we've been selling for the last year, we're going to reach out to your customer. Actually, we've already notified agents, so the customer notification should be going out shortly. And we're going to give them an option to essentially, it doesn't lengthen their term of coverage with us. It just simply stops the deductible from resetting every 3 months. So if you're reading this carefully, I have the word could here. So this is just my personal opinion. So if you have a customer with us who's used their plan, maybe they've hit their deductible, maybe you're not sure if their health status is even going to allow them to be rewritten. If you have a customer that falls into that bucket, they should seriously consider taking the extension. But if you have a customer who hasn't hit their deductible, maybe they haven't used the plan at all, they may not want to take the extension, because one of the things that's important is trying to line up the customer's policy effective date with open enrollment. Okay, so ideally, I would want to start my policy on January 1st so that when it ends, I'm right at next year's open enrollment in case something were to happen, like my health goes downhill or what have you. So for your healthier customers, what you might want to consider is terminating their existing policy early. Okay, so even though they've purchased this 4 policy package, which will give them 360 days of coverage, it's still a month-to-month contract. So they call us, or you can email us. We make it really easy to cancel policy. And then what I would do is consider writing a short policy to get them till the end of the year. As time goes by, we'll actually do a single pay policy of up to 89 days. So one strategy for healthier customers that maybe haven't hit their deductible is simply cancel what they have with us now. It's very easy. Rewrite a short policy to get them to 1/1, and at the same moment, the same day, you can write a second policy that starts on 1/1 that'll run them 364 days, jiving with next year's open enrollment. The only downside in that example I just gave you is customers going to have to pay for 2 policies at the same time, the single pay and then the permanent one starting a few months later. So hopefully that makes sense to you folks. I did include one more screen here. Let's see what it looks like. Okay, there's a pretty basic question. I've gotten this a lot. So on October 2nd, we're going to flick the switch, and you folks will be able to quote coverage that starts as soon as the next day. So for 10/3, you can bind coverage for 364-day policies, but also on October 2nd, you can bind coverage for 1/1 effective dates. So if you think about it, if you've got customers you know are a good fit for this, you can put them to bed, so to speak, in almost a full month before open enrollment starts. So that's what was on my mind, but I sure want to hear any questions from you folks. I'm sure there could be some questions. Deb, can you open it up? Is there anything I missed?
I can absolutely open it up. I'm going to take over controls. Give me a second here. Sorry about that. Technical issues. All right, here we go. So let's see if we have questions specific to Phil and the National General. Ooh, we do. Okay. I'll tell you what, do you mind if I just quickly finish up the remainder of the talking points, and then we'll get to all the questions?
Sounds
fantastic.
Right with you, Phil? Thank you. Yes.
Okay. All right. So a reminder, Highmark small group medical loss ratio rebate checks are going out. The employers would have received notification, also a list of their employees, and the employees also will be getting a letter saying that their employer is getting a rebate check. Now, of course, it's a little bit, the average rebate is about $1,500. So when you look at the ways that you can distribute those rebates, it really narrows down to very little per employee. So it's certainly not a windfall, but there are certain ways that you have to distribute these MLR rebate checks. If you're unsure of that, give me a call. I can help you out. Highmark 1.1, they are having a site of care drug management program. They're changing it to essentially evaluate those patients that have those specialty drugs, the infusions, so that they don't necessarily have to go to a hospital to get those done. They might be able to go to a less costly, more convenient location. So there's going to be some suitability issues and questions to see if your folks that are on these specialty meds can fit into this model. But watch for that as of 1/1/19. Personally, I think that's a good thing. I don't think these folks, in all of their issues that they do have with these hugely costly hugely costly meds would really balk at not going to the hospital. So I think that's a positive. And also don't forget about the URL and Colonial Life bonus. That handout is in the handouts here on the webinar. It started 9/1 through 12/31. All you have to do is let us know you have a group that is looking for voluntary benefits, and our wonderful reps, Dina and Brent McVicker, actually go out to the group and do all the heavy lifting and enrolling for you. So it's a win-win in my opinion. That's it. We're going to open it up for questions now. So thank you, Phil. All right, let's see here. Dave says, can we write 364-day coverage starting 10/2 today, or must we wait until after 10/2 to write it? And rates will not be released until 10/2, correct? Bill? Huh. There, you're unmuted. I don't know how you got muted.
Okay, so I disconnected myself by mistake, so I did not hear the question. I'm sorry. Could you just say it one more time, please?
So you cannot quote for the 364 days until October 2nd. Those rates are not going to be viewable on your site. Okay. And then
I'm sorry, but we're very close to that date. It's a week from Tuesday, but yes, that is correct.
Not a problem. So 10/2 you can write for 12/01 effective for 10/3 for 364 days. Rates will not be viewable until then. Richard asks why it's not available in Chester County. It is available in Chester County.
The whole state. If you're having a trouble, I'll flash my information up here. Should work everywhere. Where the heck's my information? There we go. Okay. Any other questions?
Yes. I would like the Life Association member to term when the STM terms instead of continuing.
I would too. Be honest with you. When I got here, I was like, this thing is crazy. It's just annoying. I'm being just straight up front with you on this one. I don't like it, but that's the way we do it. And the only thing I'd suggest is there is a little bit of diligence involved. You just have to be aware to remind your client when the short term runs out to either call us, which is the harder way to do it, and say, hey, I need to cancel all lines of coverage. Or the easier way, we'll actually take an email from the agent as long as they CC the customer, and they can cancel all lines of coverage via email. So you don't even have to bug your customer. But unfortunately, we're stuck with it at the moment. It doesn't, so just so everyone on the call understands, we force your customer to join our association to get the short term. When the short-term medical runs out, we will continue to bill that customer for that $15 forever. And if you forget, you're just going to get that angry call in 9 months and they want all their money back. And so it is an extra step, and I'm sorry, but we're kind of stuck with it.
Yeah, and I kind of giggled about the question because, yeah, it is a pain in the buttocks.
If you forget, you're going to get that call. Yeah.
Yeah. And, I do think that it really became extremely cumbersome in these 89-day policies. When a person has the 364 days, I think it will be less of an issue. unfortunately, we have to jump through some hoops. And, you know, I guess the good with the bad, unfortunately. Nate says, is treatment for pre-ex within the last 12 months for a procedure which occurred greater than 12 months still considered pre-ex?
No. You'd have to be a little bit more specific. It's like a box. It has to fit in the box. So if we receive a claim, we write for their medical records. If they'd received treatment, consultation, diagnosis, medication in that 12 months preceding for the claim in which we're holding, we're not going to cover that. But I'm not sure if that's answering that person's question.
Well, it is, because, you know, he goes on to say, give an example. Now, whether or not this would even be qualified as an enrollee, example, you're on heart attack 3 years ago. As a result, you're now on some meds. So the heart attack was more than 3 years ago, but the medication treatment is current. So that
within
is
12 months.
Pre-exist. Yeah. Yeah.
Right, right. The other one I get a lot is someone will say, hey, this person had cancer 7 years ago, so they should be fine. But generally, like with cancer, you have follow-up treatments, you know, pretty much mandatory follow-up treatments to be a compliant patient. And until you're actually released from care, and it's been 12 months, that's pretty much, you know, how it works.
Right. What's old is new again. I remember those pre-ex days. Jessica asks about electronic signatures. Can agent use their own email in event client does not have an email?
Oh my God, that's the best question ever. All right, well, so I have really good news here. Very, very good news for you folks who have been writing the product, and I'll back into that question. So we think we're going to get this done before open enrollment or right around open enrollment. So regarding verification, so for agents that don't know, if you write up every policy you write with us, the customer, we're going to email them a letter, very soon after you hit the submit button that says, hey, congratulations, we issued your short term. Mr. Miss Customer, you need to go to this separate website and do a 1-minute verification, acknowledging that you know what you're getting yourself into. And at the end of that process, they get a temporary ID card. We're pulling that whole process into the quoting system now so that the verification will be done quicker. But for customers who do not have an email, you have two choices. The easier one, which is create an email for your customer, like you would when you have to do an ACA plan, or the harder way, which is just type in no email at noemail.com. And what that'll do is that'll at least let us know the customer doesn't have an email address. They're not going to get that email saying, hey, go to this website. So you're going to have to take your customer to that website. But with no email, you can never use your own agent's email. You have to use no email at noemail.com or make one for the customer. Hopefully that answers the question.
It does.
All right.
So Jessica also asks if it benefits the agent to use the unique link to enroll or just to use the National General agent site. I'd say use your unique link because that's hard-coded to you. Would you agree, Phil?
Well, yeah, so here's how it works, and I wish we had more time and we could look at some quoting, but basically the agents create a password and ID themselves when they register at quote.nationalgeneral.com, and that is your pathway to generate quotes, issue business. When you run a quote, you can, when you put the product in the cart, at the bottom of the cart, there's an Enroll Now button, which is an agent-based application, and on the right side it says Create Proposal. If you create proposal and send it to a customer, it's like an Amazon checkout. They click on the link, they put what they want in the cart, and they check out. So that's like the second way. And then the third path is in our system. If you click on Settings at the top and then ePro links, you can capture your consumer-facing link and stick it on your website. Any one of those three pathways will credit the agent with the sale. So it doesn't really matter. It just depends on what you're trying to do. I hope that it answered the question.
I think it does. And just so everyone knows that's on the call, I am scheduling for about the 3rd or 4th week of October a more comprehensive standalone National General webinar on their short-term limited medical programs. So, you don't have to wait till then, but just know that we're going to have some more comprehensive training for you. Ken asks, there is no guaranteed renewal on the short-term medical program. You have to re-qualify every year. Absolutely. It's not a renewal per se, it is a rewrite. And they do have to answer those gatekeeper questions. But remember, there is a guaranteed issue program that they can have. Still doesn't cover pre-X, but as Phil says, if they are breathing and have a credit card, that is an option for them to at least have coverage. Jessica asks, is it okay to use the term catastrophic health plan? Must we use, yeah, don't use catastrophic health plan. I think that alludes to, and it's a bit deceptive in that it almost assumes that it's an ACA product since that terminology is used. I would definitely refer to it as short-term limited duration insurance. Absolutely.
Can I
and
speak?
Jessica, I'm sorry, go ahead.
Oh, well, I don't want to interrupt you. I just wanted to say, yeah, I mean, I could tell you what I would tell a customer. I guess the number one thing you cannot say is that it's major medical coverage, even though in my personal opinion, it is. So if it was me as the agent, I'd say, hey, look, this is $1 million of medical coverage. You have a deductible, you have a coinsurance, you have an out-of-pocket, just like an ACA plan. But this plan, the short-term medical, is not going to cover pre-existing. It's not going to cover preventive at the level an ACA plan would. Right. It doesn't cover maternity. And it's got a whole bunch of exclusions that ACA policies don't have. Those are all the reasons that make it less expensive. And and I'm sure everybody on the phone would do this, but the agent needs to do their due diligence. They need to read the brochure and the exclusions. If you're interested, I can send you a sample certificate. But conversely, the customer, and I don't want to go on and on, I'm just going to say, the customer needs to do their own due diligence for themselves. And not everybody's going to read a whole certificate, you know, but if they read the exclusions in their certificate, I mean, we give them 30 days. We have a 30-day free look cancel period, which is beyond the normal free look cancel period. So that's the way I would put it out there. You know, if you want to save money, this is going to save you money. It ain't going to cover the same. You have exposure here. If you get sick, if your health goes downhill, you're not going to be able to rewrite it. Like, just for a quick example, if you get diabetes for some crazy reason later in life, you're not eligible for that rewrite. That's why it's so important to sync up your effective date to open enrollment so you don't find yourself in a situation where you wish you find yourself in a bad spot.
Yeah, I couldn't agree more. And Jessica, I'm going to send you the Pennsylvania Insurance Department's flyer. I think it's good to use as a visual. It's going to protect yourself in that, you know, there's very little that your client would not understand when they see this side-by-side comparison. It is definitely skewed to the left, the left of the aisle, but you know, I do think it's a good thing to keep in your pocket when you're presenting these programs, just to save yourself from any you know, liability. And Ken is asking for that sample contract, and yes, we're going to take you up on that.
I'll send that. Yeah, he said Tim's a smart person. So yeah, so basically, let me just make a note here so I don't forget. Sample cert to Deb. Okay, so the one last thing on that is, if you're not sure if it's a good fit, put them in an ACA plan. You can cancel it. You can buy short-term 3 months from now, 4 months from now. You can buy it in the middle of the year. Yeah. And if you're not sure, call Deb, call me. Let us help you, and you'll be able to put some good business, help people get out of pain on their health insurance, get paid yourself, and have some happy customers. But it just ain't for everybody. And that's just the way it is.
That's exactly right. Mike adds that short-term medical, a no-brainer to sell a 100% co-insurance plan for urgent care if all is owed upon a visit is $50, while other services provided there is covered at 100%. Also, scripts included with plan deductible or separate. That is separate. It's a separate RX discount, correct?
Right. So on the inpatient side, it's all combined. So let's just say, God forbid, your customer gets cancer and they need these very expensive chemotherapeutic drugs. If it's a drug that's administered in the hospital, it's coming in the medical plan. If they're seeking an outpatient prescription for a non-pre-existing condition, we do give them a deeply discounted discount card. But to be fair to everybody on the call, it does not cover pre-existing. And if you're familiar with goodrx.com, it's probably a very similar discount. So use it when you can, and when it's pre-existing, I'd use GoodRx. Hopefully you're familiar with it. I use it myself personally.
It is a separate email to cancel the short-term medical, and it's a separate than the life association, correct?
Well, I'm not sure. Like, so if you can see this email on my screen, if you send an email to that, you send one.
Here, let me put your.
Oh, geez, I have this all set up. I thought you fixed it.
All right, well, I'm going to make you presenter again. There you go.
All right, here you go. So if you send an email to this one email to this address, what's going to happen is you're going to get an immediate bounce back saying, hey, we got your email. And in 24 to 48 hours, we're going to re-email you and tell you it's done. We terminated all lines of coverage. Have a nice day. Bye. So it's a one email deal.
Okay.
It takes, now, if you do this during open enrollment, it could take 3 days to turn it around. But right now it's a day to 2 days.
All right. And Dave asks if we can write an effective 1/2/19 so that it lasts through 12/31. Absolutely, Dave. Yeah, I would encourage that.
Smart man, Dave.
Yeah. Joe, there are some friendly ears on this conference today. Joe Pilla says hello and to wish you well.
Hey, what's up, Joe? I haven't talked to you in a while. I just appreciate everybody being on the call. I forgot to thank everybody for their business earlier. You know, we really appreciate it. We want to be your partner. Anybody else have questions?
It looks like that is, let me just double check real quick. Kelsey asks for that flyer too. Yes, I will send him. And Joe, I got your message. I will do that. So that is it. Those are all of our questions.
Okay.
Phil's screen is up, but you would see that our next webinar is next Thursday at 9:30, and that is the 27th. As always, if you have questions, give me a call. You can reach me on the phone or email debw@urlinsgroup.com. Remember the disclaimers when you're selling these things to protect yourself. Certainly remember that these products are commissionable, with a capital C, and that it is a viable solution for a lot of your individual clients, for the right client. So if you have questions on any of that, give me a call. I'm happy to help. And at this point, I'll just close down the webinar, and I thank Phil again, our Regional Sales Director.
Thanks, everybody.
National General, and thank everyone for joining in. Enjoy your day.
Thanks, Deb.
And the balance of your week, and have a wonderful weekend.
Thank you, everybody. Bye now.
Bye-bye.